on a macro level, what did you make of yesterday's action?
Well, Brian, good morning. I think that we're likely to see a lot of choppiness in the market, particularly around tech. What investors are, I think, doing is repositioning a bit to make sure they have decent exposure to a bunch of the reopening trades. The banks, the energy companies, some industrials. A lot of investors got underweight those last year as they saw some of their tech holdings really appreciate, particularly some of those bigger names. And what they're realizing now is some of those high flyers from last year have gotten pretty expensive. They're rebalancing to get some exposure to some of the reopening plays. And that's going to cause these sell-offs that we've been seeing. But then, as yesterday, people recognize those sell-offs create opportunities for those investors who are underweight some of that technology area where we're still seeing a lot of good secular growth opportunities. So I think we're going to see a fair bit of volatility as we see some big institutional investors rebalance, and then others recognize that they need that exposure to tech in order to get that secular growth into their portfolios alongside of the reopening plays.
Yeah, and I guess, Sarah, it's this. The question everybody has is, what's going to happen when we all start to get back out there? Now, I know a large part of the country is almost back to normal already. I get that. But for us here in the Northeast, 40% of GDP, we're inching out. Do you think the stay-at-home trade is indeed over? No, everyone, it's this huge fight of, well, you go back to the gym or stay on your Peloton. Nobody really knows. What do you think?
Yeah, I mean, I think we're seeing that in Peloton, right? Peloton was up again yesterday, but it's nowhere near its peak. And it's interesting that as the pandemic sort of winds down, as people are getting vaccinated, as people can go back to the gym, as the weather's warming up around a lot of the country and people can work out outside again, Peloton is at a place where the stock isn't performing as well, where the bike deliveries still take a long time. And while Apple is really ramping up, their at-home fitness offerings, while Google's experimenting with some offerings. And so it is really, really hard to know if we're all going to go back to using our at-home gym equipment as an extra closet in a few months.
Yeah, what do you think, Joanne? I mean, I guess that's the story. What's going to happen to the economy, to stocks, to earnings? Are we just going to ditch the Peloton by the side of the road? I went to a gym yesterday, honestly. It was mobbed.
I don't think we're going to ditch the Peloton, but I think there's an awful lot of earnings growth that's already built into a lot of those stay-at-home positions. I think what investors would be wise to do is to look a little bit longer term. The reopening is happening. It doesn't mean that we need to abandon tech. By contrast, there's an awful lot of really good multi-year drivers that are still out there. I mean, look at the 5G cycle. It's just starting now. Look at where enterprises are spending who had to take a year off last year to save money. Cisco, for example, starting to see their enterprise customers coming back. So if you look longer term away from those stay-at-home trades, what you're going to find is a number of technology possibilities that are really trading at attractive multiples. In the 5G space, for example, Qorvo is an example of a company that has a very attractive multiple, well below the market, but much higher growth expectations than the market. Other ones in that space are Lumentum or Ciena. Qualcomm has traded off pretty sharply here, and it has many years ahead of it in terms of 5G, because 5G isn't just cell phones anymore. 5G is industrials, it's medical equipment. So it's across the market in a way that a cellular upgrade cycle never had before. So, I think, the stay-at-home trades are seeing some pullback, as they probably should, given how high the multiples have gotten in some of those stocks. But there are still plenty of opportunities in technology. And I think, investors like, our investors, individual stock investors, are wise to pick and choose, look for growth at a reasonable price at this point. And now there are even more opportunities after the pullback we've seen so far this year.
Yeah, and Sarah, where are you and your team finding opportunities? Is it SPACs? I mean, I think you, me, and Joanne should get together and start a SPAC. We're the only three people in America that I think don't have one at this point. Are you buying SPACs? Are you buying tech? If not, what do you like right now?
Yeah, I mean, look, there is SPAC mania right now, and we're seeing as there are more and more SPACs, they have to go earlier and earlier to find the companies to take public, and so you have companies going public with very low revenues that are popping to $1-2 billion, and there's a huge question about if these companies are anywhere near ready to be public, and I guess we'll find that out in the coming quarters, and that's not the only thing that is sort of going a little bit crazy right now. When Jack Dorsey, CEO of Square and Twitter, is selling an NFT, a non-fungible token of his first tweet, and the current bid is over $2 million, right? To say that you technically own a tweet from 12 years ago, you start to get a sense that there is a retail investor right now who will buy and sell anything they can, or in the case of NFTs, can't get their hands on.
Shepard Smith here. Thanks for watching CNBC on YouTube.